Anusha, thank you so much for joining me here today at PPI Europe. So, can you tell me about your business, Select Africa, and what you do?
Yeah, sure. Thank you, Lily. Great to be here. So Select Africa, we are a Pan-African non-bank lending institution. And we've got operations across maybe 6 different countries on the continent. And we've more recently expanded into property development. So quite a diversified business group. And I look at capital raising, debt structuring, investor relations for the business.
Amazing. So, as that's a huge part of your job, I just wanted to know what trends and challenges are you noticing in that?
Yeah, so quite significant. I mean, it's very difficult to sort of predict interest rates in the current climate. I think every year we look at our crystal ball and try to have a market assessment of where rates will actually end up landing, and we've been, quite challenging to actually predict that. But yeah, having said that, it also kind of enables very creative solutions as well. So having some limitations does actually enable us to think about things quite differently. The nice thing about Select is that we've got quite a diversified funding pool, and really trying to focus on, different capital instruments. So we might have listed bond programs on exchanges in markets that we operate in, or private placements. We also look at private credit and bilateral loan agreements. We have different investors, including local corporates, institutions, international DFIs, impact investors, pension funds, etc., as well as retail offering as well with our listed MTN. So quite a nice diversified funding pool, and we tend to look at both local currency and hard currency as well for our investments.
That's so interesting. So, with such a wide pool, as you say, where does private placement sit in your, maybe list of importance?
Yeah. So I think it's, all of our debt instruments are quite important, and we definitely try to follow what the market dictates, and who's got investment appetite. I think for us, having creative structures is quite important to follow the investor pool and their appetite and their mandate. Part of our work is, staying very close to an investor, understanding what their fund mandate is, how things might be changing and evolving, and, kind of looking at how profiles evolve as well, geographical spread, etc. So I would say it's very much market dictated. And what's nice about private placements as well is that you have more of a bespoke nature of a transaction. You're able to, structure the deal in terms of covenants. Recently we've tried to implement ESG ratchets down. So, an adjustment to the credit risk premium as we institute specific frameworks within the business. I think we view ESG integration as pricing for risk. And as we are able to do that, we think that the note holder should recognize the good inroads that we've made in the business as well.
Yeah, and absolutely. And sustainable considerations are just huge, especially on the infrastructure side as well. So can you tell me maybe more about the market trends that are impacting, your business and, relationships with the investors?
Yeah, sure. So I think it's very important to stay as close to your investors as you possibly can, to kind of understand what their concerns are. If they are also going through a default scenario, how things are playing out, what their concerns are. I think sometimes when we're drafting loan agreements, we look at things in, isolation of like how things will pan out in an event of default, and very theoretical approach. And what's nice is actually understanding, market trends and how things actually do translate. So yeah, I would say kind of understanding what their key risks are. I think sometimes, it's also, I would rather have the conversation with our investor pool, especially in private debt and private placements, rather than them hearing it in media. And, I think it also just builds trust and credibility with the investment teams that, you being proactive in recognizing, challenges in economic cycles in countries. Often with our diversified investor pool, they're not boots on the ground in the countries that we operate in. So I think having us as a medium to provide that information is quite important.
Yeah, and I mean that really describes the private placement industry in general, just that personable touch. So you mentioned some key risks there. How about geopolitical risks? How do you address that?
Yeah, I mean, we're living in such uncertain times. We're living amongst wars happening, um, political regimes falling quite quickly, protest actions, etc. This is not a new phenomenon for us in Africa. I think, we also tend to have a bit of the tailwinds that happen from a global standpoint as well. The market uncertainty on the geopolitical standpoint does affect us. But, business and trading continues as usual. We tend to look at hedging structures for a lot of our hard currency transactions. So we try to mitigate risk against that. And then, just kind of staying as close to our investor pool as well. And, understanding what's happening on the ground with our teams in country and making sure everyone's safe and protected if there is any chaotic situations unfolding.
Absolutely. Anusha, thank you so much for joining me here today.
Thank you, Lily. It was great.